Hello everybody, good afternoon. Welcome to the free market update here tonight for Simpler Futures. And so I'm looking around, I'm seeing a lot of hurry up and wait, but in the stock index futures here, moreover with a bullish bias, I have to tell you. A couple things I was looking at today and kind of carry over into tomorrow is obviously the preceding trend here, up, retracement into the averages, and then up. We had this little sideways trade for a bit, and I was offering the folks in the room kind of a level to beat in order to, kind of be good, and that was 22.62. We're doing that today, and that was against the alternative, and that was a trade below last week's low at 22.43. That's not the case, and so I'm going to have to obviously yield to the party in control here and stay in that camp until we see something that tells us otherwise. Well, here's the thing. Check this out. And that's not going to change. I mean, we're going to go with the bullish bias here. Level to maintain above here to me is 22.62. We're doing that today, even with a close. That's good. On the mid caps, I was very pleased to see them start to reinitiate here with, as you can see, we've gone into a retracement, but this was a leading sector on the way up. We went into a small retracement, so I'm happy to see this start to reinitiate the uptick. Level here to maintain is, it appears, about 1681, right in there. Okay, want to stay above that. That's really the bullish level. You really kind of want to stay above like 1678, but right in there, you want to stay above that. And it looks pretty good. This was a little concerning, and I'll point it out for that reason, but show you how it's actually starting to come right. And that is, look at the consistency here of the selling. These wicks across the top here at like this 49, call it 60 level. Pretty consistent selling up there. Wicks are all across the top. And so I was actually pretty concerned about that. But what happens today is we're getting the close up here, you could say nicely, I guess, in the face of those sellers on those wicks. So with that, especially with the close up here, they're nervous. They should be. And this is about the cheapest out that you'll get if you're short at 49, 60 up there on those wicks. And somebody is, obviously. You want to really think hard with today's close about how bearish you might want to continue to be. In other words, you might want to cover. If that's the case, well, then we use those stops to propel this thing even higher, right? I'm not saying it goes to 5,000 or more, but I am saying that it looks like a bullish bias. For the week, tomorrow, even if it does dip down tomorrow, you got to view it as a buying opportunity, and continuing to buy the dip until this behavior changes. That's why I'm showing you this, is because we've got consistency of behavior here that continues to support the bullish bias of these charts, these equity index futures here. This is the Dow, and we see about the same thing. Got a decent close up here on today's bullish bias. Even if you were to come back and give this thing a 3-bar trailing stop or so, something back in here, well, then your bullish bias is against, we'll say 16 or 19, call it 6.5. Well, it's at 19.9. That means it's got 250 ticks worth of wiggle room, and you still maintain a bullish bias. So this thing could break 200 ticks tomorrow, 20 S&P points, and it's still bullish. This Dow is. I mean, that's the way it looks to me. I mean, it's not going to really run stops back behind, a 3-bar trailing stop until it's in excess of 200 points deeper than where it is. So that's a nice way of saying, and we usually, what we do over here is cover like the S&P futures in this free video, or the equity index futures anyway. This to me maintains a bullish bias. This is the way we're treating this in our trade room. and that is that we respect the underlying trend. There's a retracement, here's underlying trend, here's a bit of a sideways trade to retracement, and then that would be the anticipation of the the next trend. The measured move or anticipated priced in move on this week could easily take this thing to 22.85 if you look at the options chain and what's priced into the expected move, I guess, if you will, for the week. All of that bullish bias against, and that's what that red line is right there, about a 22.43 trade, which takes it below last low's swing low on the week. Okay, so that's pretty much the review of the equity index futures. I'm going to go cover a lot of charts over in the premium video, and I'll tell you this, a lot of it is kind of a hurry up and wait in the pretty low volume participation that we've got right now this week toward the end of the year. And so there's kind of an underlying trend of the recommendation being kind of let's wait on a retracement here and not be part of the retracement. That's sort of the hurry up and wait mode of a lot of the charts. But here's one for you. This sets up for a possible potential trade for tomorrow, okay? And that is, we've got the uptick, the retracement, the averages, the uptick. We've gotten here, nice retracement, the averages. Today's inside range. The trade idea here would be on copper. This is a copper March copper chart. Would be tomorrow, a breach of today's high for a long, and the risk goes against today's low as the stop, and the idea that we start the retracement series back, we end the retracement series and start the initiation of the next leg. Okay, so this would mark that inside range. I'm saying could trigger tomorrow with a high breach of today's high, ending the retracement series and beginning of the next leg in copper. And outside of that, I got a lot of hurry up and wait, like in crude's hurry up and wait, gold for maybe a couple of days, euro same thing, that kind of deal. So here's maybe a trade for you for tomorrow. So hope that helps. Good trade, nice evening. You guys take it easy in this low volume trade this week. Either that or take a couple of days off, and market open same time again tomorrow. So don't be afraid to take a day off and go shopping or do something for yourself. And other than that, I'll be with you again at the next update. Okay, good night.